Today it is July the 8th. We are here for our mortgage rate update and also what's going on in the housing market. If we haven't met, my name is Chelsea Winstead. I'm a home financing strategist and a mortgage lender. I specialize all up and down the East Coast. So if you are looking to buy a home in 2025 and you want a personalized strategy and plan, in addition to being personally paired with a top buyer agent in your area, let's have a convo. Link on my profile to fill out a connection form. Okay, let's get into what we saw today for interest rates. Now, I want to actually say this because I don't always say this because it's a big, long thing and I'll make it fast, but interest rates are personal. And I think a lot of people don't understand this. So what one person gets doesn't mean that you're going to get that rate. Interest rates are based on risk. Okay. So what happens is when a bank gets, and this is any bank, they get access to your personal information. They look at a variety of things, and based on that information, you then get a personal interest rate. So rates are actually quite individualized. I don't think people realize that. So a lot of the time on my videos, people leave a comment and they'll drop something and they'll say, oh, I just locked in for this interest rate today. And all these people come flocking and they go, how? My rate was this. Y'all, it is important to obviously confirm that you're not getting like totally screwed over. But the reality is that most of the time, most companies, they wouldn't get away with like way overcharging because they would just fundamentally go out of business. What is often happening is there's a difference in what the bank sees you as being worthy. Okay. So I don't mean to say like worthy, that sounds nasty, but it's kind of true. So what a bank does is when you look more risky, you get a higher interest rate because that's how the bank protects itself from lending money out to somebody who may not be able to pay it back. So when you have a lower credit score, when you have no money saved up, when you're not putting any money down or you're putting like the least amount of money down on a loan, all of those things factor in. And so often if you have a low credit score, if you have no money in savings, and if you're putting like 0% down or you're using some type of like down payment assistance program, and or if you are putting like the least amount down possible, you often get rewarded with a higher rate. I mean, because the higher rate, then when a bank looks at those things, they feel like you are more risky to lend money to. Okay. Whereas in theory, let's say like you have really great credit. Maybe you have a couple months of savings put aside, but maybe you're still putting down the minimum payment or the minimum down payment required. Because you have two other factors that are positive, you probably would have a better interest rate. So I just want to preface that because I don't think a lot of people understand interest rates are really personal. So please do not ever read comments in here. Also, I get really pissed when I see those videos of like, tell me what you pay a month and tell me your mortgage rate. Like, it's just an apple and an orange, y'all. Like everybody is facing a different scenario. And so I'm gonna get off my soapbox, but please note that if you go chasing around the internet trying to find the cheapest rate, you're probably not getting a low rate because of something that you have going on with your personal finances, and running to 5 other places to try to find a lower rate. You're probably just gonna get fundamentally handed the same information. So with that being said, my long 3-minute tangent, rates today. Again, these are averages, and also this is based on personal information. Also note that a lot of these rates are with points. People pay for points a lot of the time. I think the stat is like 75% of loans right now, there are points associated to get these rates to where they are. 30-year fixed conventional was between 6.75 and 6.81 today on average. 15-year conventional between 5.1 and 5.91 and 5.95 today. 5/1 ARMs were an average of 6.25% today. FHA 30-year fixed was an average of 6.7% today. VA 30-year fixed was an average of 6.85% today. So again, note that yes, those are the averages, but your interest rate is a very personal number to you and your profile and what you have going on. Now, we did see rates go up a little bit today, a little bit. I'll explain why. So number one, stocks are down today because investors are nervous about the new tariff announcement that went out. So essentially, if no trade deal is made by August the 1st, tariffs will kick back in. Obviously, could hurt a lot of businesses and the related economy to those businesses. So people in that fear and worry started to sell off stocks. So that was number one. Bonds also fell a little bit today, which isn't great for mortgage rates. So Central bank in Australia, they did not cut interest rates today like most people were expecting. So this unexpected move from them actually caused like global bonds, like all around, including our US mortgage bonds, to go up. So then that pushes mortgage rates to be higher. Okay. Another thing specifically is that top White House advisor has said that tariffs aren't pushing prices up yet. So inflation looks calm for now, which is helping keeping the rates from skyrocketing. But if inflation were rising really quickly, our Fed, right, would also raise rates faster to try to limit the quick inflation happening, right? So the fact that right now we're essentially not seeing at the moment the tariffs skyrocketing prices, aka inflation looks calm at the moment. So that's why our rates are kind of like holding a little bit. So with all that being said, this is my 2 cents. I think it's interesting because even from the start of the year, we've seen some up and down trajectory. And I think a lot of people, and I specifically mean people who have to buy a home. I think what's really hard is for anyone who has purchased a home in between 2 and 3%, if you have no for real reason that you have to move. And what I mean by that is either somebody was born, somebody passed away, you're having to relocate because of a job, and you cannot get approved to keep like 2 homes like within your own name. Like there's something that's happened that you have to move, like your current home just doesn't work for you. I think a lot of people right now, even if they want the bigger home or they want the fancier thing, it is hard for a lot of people to justify making that move, right? So I get that. But for those of you who are either you're in that bucket where like you're having to sell and buy somewhere different because of just like a life circumstance, or if you are a first time homeowner, that's the thing is I get a lot of people like, you know, the whole rent versus buy comparison. Some people truly could maybe be super happy just being lifelong renters. Like, and that's fine. Like, I'm only here to help people who want to buy a home. My job isn't to convince you to buy a house. But the reality is that doesn't work for some people. Some people have families. Some people have animals. Some people want like bigger spaces. They want their own space. They want to be able to do to their home what they want to. They don't want to have to ask permission to do things. They want to be able to pay money into something that does build equity over time. And if that's what you specifically want to do, the reality is that like there's never a perfect time to buy a freaking house. And I think that when you get really obsessive over like trying to time the market, you will just truly always kick your own ass. And I only say that because like I talk to people every day who are like, oh my God, we should have bought in 2020, 2021, 2022 when the rates were still super low. And we didn't because we thought it was going to get better. We thought X, Y, and Z. And look at us now. Rates are higher. Home prices are higher. Y'all, the reality is that in markets, and I've done a lot of videos on this. So if you're new to my page, I would go back and look at a few of my other videos that I've talked about, like home prices cooling. We are not seeing a housing crash. So I think that's like this big misunderstanding that people are like waiting around, like conspiracy theorists, like waiting for housing markets to crash. That's not going to be a thing. I also have done a whole video on that. There's actually a video pinned to the very top of my profile. It's from June the 6th. I debunk essentially how like there's misinformation around markets cooling and markets crashing. And the reality is that I think there's like 1 or 2 towns in Florida that have seen by definition like a crash in the past like couple months. And even then, it's like home values have dropped more than 15% in a short span of time and within a specific like zip code. But like holistically, especially like, again, I specialize on the East Coast, we are not seeing a crash. We are seeing cooling. And for many of you, this is only to your benefit because it means that like home values at the moment are like settling in. But the reality is that buying a home is always going to feel scary. Y'all, even when the freaking rates were 2 and 3%, people were still scared. It's a big investment. Like you are buying a house, you are spending a lot of money. You're spending probably the most money you're ever going to spend on something. Of course it's scary. But I think the reality is that if you keep running from the fear of buying, you just need to maybe come to the like conclusion that maybe you should just always rent, if you're always going to let the fear of buying get in your way. Even now, even with rates and home prices, y'all, people buy homes every day. It is not impossible. And I really hate the like really negative like rhetoric on here and just like narrative of it's impossible to buy. It's not. It does take more planning. It does take more discipline. However, like you are capable. You can do it if you want to. If you want to set your mind to do it, you can do it. So if you're trying to buy this year, y'all stop trying to outrun the market or wait for some crash. Crash ain't gonna happen. Also, it's always going to be scary because it's expensive. All right, off my soapbox for tonight. Love y'all. See you tomorrow.